Today, much of the Western world has gone to a zero interest rate or even negative interest rate policy. Countries in Europe, Japan, now even the United States have said that if you're a saver, you're going to either earn no interest on your money, or you may even pay to store your money in their local currency. And while this may be good for borrowers, if you are a saver, it's bad news. And in this video, I'm going to share with you several ways that you can protect your cash and protect your wealth in the era of negative interest rates. Hey guys, I'm Andrew Henderson. Nomad Capitalist is all about go where you're treated best. This can mean legal offshore bank accounts, ways to protect your money, ways to earn more money in boom markets overseas. If you want to learn more about what we do, go to nomadcapitalist.com. And right now I want to talk about this policy of negative interest rates that's taking place in countries like Japan, in Switzerland, in many parts of Europe. And now zero interest rates have come to the United States. What happens is central banks around the world decide when times get tough, they lower rates to stimulate the economy. If you have money in the bank, if you believe in saving cash, if you believe in having some liquidity, this can be disastrous. In fact, look at today versus 10 or 20 years ago. You can't live on your savings anymore. You can't live on cash in the bank. People used to live on CDs or fixed deposits. They would live off the interest. It's impossible. But there's three things that I think you can do to hedge against what's going on in these developed countries that have lowered interest rates to the floor and even made you pay money to keep money in their banks. The first thing is simply bank overseas. Now, I always tell people that having an offshore bank account is one of the first steps to diversifying yourself internationally. It's a legal strategy that you can take. Depending on where you're from and where you live, you may need to file a couple of forms, but it's a legal thing that you can do. It's not about hiding money, but what it can be in an era of these low interest rates is about diversifying yourself where banks actually pay higher interest rates. In emerging world countries, people who want to borrow money are used to paying higher interest rates. You think mortgages are 2.5% or 3%? In many of these countries, they could be 9 or 10 or 12% or even higher. And so often those loans are denominated in their local currency, but these offshore banks will often pay higher interest rates in US dollars and euros and even other currencies like pounds, for example. Now, if you're holding Norwegian kroner or some other more exotic or less common currency, you're going to have a more difficult time getting your currency. But for US dollars, for example, you can go to countries like Georgia, Armenia, Ecuador, Cambodia, some of the Central Asian STAN countries, and you can earn interest rates from 3, 4, 5, sometimes even 6% in US dollars. Mongolia is another country that pays pretty high interest rates. In some of these countries, you don't need to be a resident. You don't need to have a business or any other interest there. You can come and open a bank account as a tourist. And so you're not taking on currency risk. You are taking on any risk associated with that country's bank. However, if you're used to keeping your money in a country like the United States, understand that banks in many of these countries are actually better capitalized. They actually have more liquidity than the banks in the United States. These countries deposit insurance funds. Well, they don't insure as high amounts of money as you'd find in the US, Canada, Australia. Oftentimes they're more solvent. And so in these countries, while they may seem far-flung to some, you've actually got some relatively international banks. You've got French banks or Singaporean banks. Occasionally you'll even have an American bank like a Citibank that does business in these countries, and you can open an account and you can earn more money simply because they need that money in their system. And so it's a way that you can dramatically increase your earnings. I've got one bank account right now, 5.25%. They've asked me not to mention them, but 5.25% in US dollars for 18-month term deposit. Now, way number two you can protect yourself is not only to move your money offshore into these offshore banks, but to move your money into foreign currencies. Now, there's two ways to play this. There's a more conservative way and there's a more risky way. The more conservative way is by moving your money into currencies that either are pegged to or trade within a narrow band or are generally trading pretty close to your established base currency. So, for example, you hold US dollars. The Emirati dirham in the United Arab Emirates is pegged to the US dollar. 1,000 dirhams equals about 272 US dollars. That's the peg. It's not going to change. However, interest rates are often a point or two higher. I've even seen one savings account with some strings attached paying as much as 4% interest on certain balances of Emirati dirhams. You see other examples of this in Cambodia, the Cambodian riel very closely trades to the United States. It's almost always right around 4,000 to 1. In Hong Kong, interest rates aren't that much higher. Sometimes they're not higher at all, but it's worth checking out, because the Hong Kong dollar trades within a very narrow band to the US dollar. Other currencies like Ecuador, the US dollar is the currency. And so that's a way to do it as well. So look at currencies like that. Okay? On the riskier side, you have currencies like the Armenian dram, which, while it has no guarantee of doing so for a number of years, has traded relatively close with the US dollar. You've seen 1% here, 2% there, but if you look over a 5-year span from 2015 to 2020, it actually didn't change that much, but the interest rate was much higher. So while these more conservative currencies, you might get an extra 1 or 1.5% above the dollar or above the euro, these currencies you could make 9 or 10%. Now, there are some of these that are just bad. If you put your money in the Mongolian tugrik at 14% 5 years ago, you would be not so happy. Okay, so you have to be careful which currencies you hold. And obviously, there's some currencies, they have a lot of volatility. They go up, they go down. I've had money in the Georgian lari for a while. It's not always in great shape. I have exposure to Georgia. I think that long-term Georgia will be a good place to be, and so I'm willing to take that on. But if you can find currencies that are paying higher interest, the Egyptian pound still pays into the teens in interest. It's actually come down recently and become stronger against the US dollar after getting badly beaten up. So as you can see, a lot of these are related to the dollar. You also have examples if you're in euros. There are a few currencies that are connected with the euro, although they don't often return that much more. So the Bulgarian lev, for example, is a peg to the euro. Montenegro uses the euro, and so their interest rates on euros are 1%. Nothing great to write home about. You could get better in Georgia, Armenia, etc. But those are two opportunities to earn higher interest. The third opportunity to protect yourself in this era of negative interest rates is simply owning property overseas. Now, I've talked about owning real estate overseas as a way to, for some people, legally have non-reportable assets overseas. It's a way to take part in the growth of boom markets. It's also a way to hedge against lower interest rates for two ways. Number one is sometimes property overseas is denominated in US dollars. So countries like Georgia and Cambodia we talked about, they sell their property in US dollars. However, there are other countries where they buy their property in their local currency. And so that means that you've got some of their foreign currency exposure. If they have a good foreign currency that could have some stability, you're getting exposure to that. But because in many of these countries, they don't have the wide availability of mortgages, because the mortgages are expensive, people often pay cash for properties. And what happens is you don't have this insane driving up the market in the way that you do in some Western markets, where properties get driven up merely because of the supply of easy money, where it's so cheap to borrow, and then the minute something bad happens, I lived in Arizona and California in 2007, 2008, you saw property prices crashing down. I remember going to Las Vegas when developers were begging anyone to take properties off of them for 30 cents on the dollar. And to me, you have property markets that were built up, people who were moving there, they took cheap money. You don't have that in other countries. You look at a graph of Cambodia, a market that I've talked about for a long time. This market has gone nowhere but up because people are buying properties in cash. You've got relatively low values. You've got more and more people coming in. More and more people have money. The fundamentals are stronger. And so as a result, you can earn a higher yield that you would in a market when everyone is just buying up as much leveraged property as possible. You can earn yields anywhere from 6 to 12%. Depending on your tax situation, those yields could be more tax advantaged. But it's also just a great way to diversify. So for me, diversifying internationally is the best way to protect yourself from a number of situations, including your country's central bank setting interest rates at 0 or even below. That's not a great situation to be in, but there are places where you can go. There are safe havens around the world, and those are 3 of them. How can Nomad Capitalist help you? 4 ways. Number 1, subscribe to our channel and click the notification bell to make sure you get our new video every day. Number 2, get a copy of Nomad Capitalist, the book. You'll learn a lot of my personal experiences over a dozen years of studying this stuff, as well as exactly some of the strategies that you can use to build your Nomad Capitalist plan. Number 3, if you're not sure where to start but you want to come and learn from my team and I, you want to come and mingle with like-minded people, learn more about our live conference, Nomad Capitalist Live. It's coming up soon. And number 4, if you want some help right now because you've got a burning issue, you need something solved, you want to lower your taxes, get a second passport, or build the Nomad Capitalist lifestyle of your dreams, go to nomadcapitalist.com and click on Become a Client.